Hey guys, thanks for tuning in today. We have another great story about some investing ideas that really help to limit the taxable burden on some of our clients. So this story starts with our friend John, who had, within the past 5 years, sold some of his property and decided to invest the money into the capital markets. Now at the time, he had invested the money with some basic, well-known mutual funds and had more or less let that pile of money take a back seat until he came in for a review with us. After reviewing the various financial statements John gave us, it was clear that there could potentially be some efficiencies not yet captured with his investments. First, we had to make sure that we had the appropriate risk and goal parameters determined when it came to money. The first issue when aligning these up was that John had let the portfolio simply drift in its allocation over time, forgetting to rebalance or harvest losses to offset gains when it came to managing taxes. So not only was there a mismanagement of tax inefficiencies, but his risk profile had drifted off course with the funds he had invested in. We see this all the time when our clients bring us their retail investment account statements. As I say, just because you buy some mutual funds or some investment products doesn't mean you have a plan that's integrating everything coherently or cohesively. The second issue, which plays into taxes, was that the bonds and income generating instruments within his portfolio were generating dividends which were reported each year on his taxes. Now this silent tax burden was eroding his overall balance sheet each year through these year-end tax payments. You see, he had gotten the 1099 showing his overall income generated from his funds, but failed to realize these dollars as cash in hand. Now typically, as in this case, most people elect to have their dividends and capital gains reinvested for future growth, not received as cash distribution. This allows for a higher total return value than if they had taken these out as a cash distribution. As in John's case, he wasn't needing the income, so it was reinvested. But this didn't get rid of the reporting requirements that included this income on his taxes. By moving some investments around, and this being specific to John, of course, we were able to reduce the negative portfolio drag, which was removing about 1.5% of the investment growth of his investable balance sheet each year, due to cash on the balance sheet eroding because of the taxes owed, i.e. out the back door. So by fixing this with a more efficient portfolio makeup, John was able to reverse this negative tax erosion. Now these results, of course, vary depending on variables such as final tax rates applied to these earnings, portfolio makeup and turnover, as well as portfolio risk and distribution frequency. Now everyone's results will vary, of course, and really I bring this story up because it's in particular since this is the time of year that many people plan and prepare with their respective professionals. Instead of just gathering all your 1099s and all the other tax-related documents, perhaps take a moment to read those documents and note the amount of ordinary dividends or income you may be reporting for the past tax year. Now this income most likely hasn't had any withholding or taxes taken out of it. In the end, you may enjoy seeing your investments grow because capital gains and dividends are being reinvested, but you might not like that your tax refund is coming up short, or that you have to pay in more than you realize given the taxes owed in needing to report all of your income and gains each year. This ends up being another great example of how paying attention to a few small details or having a financial planning professional looking out for you can pay off in the end. If this simple inefficiency fix ends up recovering money you otherwise were paying in taxes, this could really add to your overall life of your investments. With that, thanks for tuning in today. If you found this information useful in preparing you for your investment and tax decisions, please hit the button below before you go. and share with someone you care about. Until next time, keep doing life better.